and welcome. You're watching The Money Show with me, Kavita Thakliyal, and it's a show where you can send across your personal finance queries and know everything about your personal finance portfolio. We do your life financial planning on the show and also explain you all the concepts related to investments and your financial goals and financial strategies for those goals. We answer your queries on the show as well, and all you have to do is just send across your questions on our WhatsApp number, which is 865-797-4571. We also have an email ID, which is themoneyshow@etnow.tv, where you can send across your questions. Let's begin the show today, and today we're going to talk about NPS, National Pension System, where you can invest for your retirement. It's a specific investment instrument or an investment option where you can accumulate money for your retirement purpose, for your retirement financial goal. Now, how do you do that? We'll be talking about that in the later half of the show, but then considering the volatility that we are seeing in the market, if you are an NPS investor, what should be your strategy? Should you be changing your NPS scheme, the selection or the fund manager? Should you be changing your investment amount? How an NPS investor should understand the market, the current market movement right now? I have with me Sivakumar K, Chief Investment Officer, ICICI Pru Pension Fund Management. Siva, hi, good evening and welcome to the show. I just want to understand, looking at the fund's performance or performance across market caps, large cap companies, mid caps and small caps in terms of returns and the way the stocks have performed, there has been a lot of volatility. In fact, 2025 is said to be a year where one cannot be expecting returns that they saw in last 3.5 years to 4 years. Now, having said that, how should an NPS investor understand the current market movement and the volatility especially?
Yeah. Good evening, Kavitaji, and thank you for the invite. The current market volatility might be somewhat unnerving for some of the investors, but I would say that NPS investors must be the least bothered segment among the market participants about this current market volatility. The reason is very simple. NPS is a long-term investment product. We invest for 30, 40 years, which is basically making our retirement kitty. And given the long investment journey of each NPS subscriber, the short-term volatility of the market shouldn't actually bother the NPS subscribers. It is actually, if you look at the investment history, we have seen that during market corrections, the units that an investor accumulates, those units actually give him the best return if he looks back into his investment journey. So I would say the market volatility shouldn't be seen as something of a concern. It is more of a feature of any equity market. It's just that after COVID, we have been used to a very stable market, but now volatility is back in the equity markets. And this will continue to be a feature for the equity markets even going forward. But I would say that given the long gestation period of NPS, subscribers shouldn't be bothered. They should be looking at their asset allocation closely and sticking to their asset allocation plans. Use the market correction if they have any surplus funds to actually invest more into the scheme so that they can benefit from the low cost and the tax incentives that the scheme can offer to them.
Now, one question to me. I really want to understand how many times in a year an NPS investor can change their equity allocation. If suppose one has an active scheme selected or active aspect of the NPS investment selected, how can we change the fund manager? Why should we change the fund manager? And what about your equity allocation? Can that be changed?
Sure. In an active choice, the subscriber gets to choose the asset allocation between the equity scheme, the government securities scheme, the corporate bond scheme, and the alternate investment scheme. The equity, there is a cap of 75%. So the subscribers can select equity till 75% of their overall AUM. They can change this particular allocation 4 times in a year without any exit load or any taxation implications. So that's the beauty of NPS. Subscribers who are very market savvy can actually change their asset allocation 4 times in a year, and depending on what they perceive the market dynamics are going to be in the coming year. Coming to the change of fund manager, yes, every year NPS allows the subscriber to change the fund manager once, again, without any exit load or without any taxation implications. So basically, net, you can change the scheme asset allocation 4 times in a year, and you can change the fund manager once a year. so that you can ensure that you have a smooth journey while you accumulate for your retirement.
Siva, the NPS allocation that you handle, the equity part is just like a multi-cap fund or more like a flexi-cap fund? What's the kind of equity exposure we are talking about across market caps?
No, very good question. Currently, the investment universe for the equity scheme is the top 200 names. So basically, we have all the large cap names, and also we have the top tier mid cap names. So if I have to put it in a bracket, it's more of a large cap and a mid cap nature to the scheme, with the top tier mid caps getting selected into the equity scheme. And this particular investment universe is reviewed by the regulator on a semi-annual basis. So every 6 months, we get a new investment universe. Again, basically, we get the top 200 market cap, top 200 names going by their market capitalization, which is reviewed by the regulator on a semi-annual basis.
Like a mandatory thing that you should not be having investment in mid cap and small cap beyond a specific threshold to for risk mitigation and to provide stability to your equity allocation. Is that the reason?
That's right. That's right. The fact that NPS funds are being protected from a retirement point of view, the regulator also ensures that the exposure that we take in the equity scheme is limited to the top tier names, keeping in mind the security that they offer in times of market volatility. But like I said, now NPS also allows the subscribers exposure to top tier mid cap names. So over the longer term, we have seen the mid cap names doing slightly better than the large cap names in terms of market returns. So the subscribers also benefit from that from a long term point of view.
Right. Now, talking about increasing the equity allocation, do you think is the right time for an NPS investor to do that in active choice?
It's a very interesting question, and also it's the response will depend on the particular individual. So if someone has a very long time horizon till his retirement, and he has a higher risk appetite, he can definitely use the market corrections to actually increase his equity allocation. Like I said, the cap is 75%. So that actually allows the subscribers to actually change the asset allocation and maybe increase the equity allocation as and when they pursue that the market has corrected to something which is fair in valuation terms.
All right. Now, talking about, since you're investing in equity and it's a retirement goal, you better stay put in this particular investment for a very long time. How do we review our NPS allocation as far as equity is concerned? What should be that process or that protocol? We should be doing it every 6 months, because there is an option where you can change the fund manager if you're not happy with the fund performance. So how often should one be doing it?
Yes, 6 months is a fair enough period to review the performance of the schemes. But typically, I would say one should go by the long-term performance of the fund managers, because equity schemes typically are prone to short-term volatility. I would say that one should actually look at the long-term performance of their particular equity scheme and then take a call in terms of continuing with the fund manager or changing to some other NPS fund manager.
One last question now. I was just looking at the returns. I mean, it's really not fair to look at the 1 year return, but then talking about 3 year and 5 year, I mean, you are in one of the top ranges that we can see. How does the strategy differ from a fund manager's perspective? If I need to understand this, how can a strategy differ as far as the equity allocation is concerned?
Kavitaji, the investment universe, like I said, is a 200 stock long universe. So obviously, the kind of calls that the fund managers take differs from fund manager to fund manager. Obviously, it's a bottom-up approach for most of the times. So the universe is quite large, and obviously, it's entirely up to the fund manager as to how he would like to allocate his equity exposure among the large cap names and the sectoral calls that the fund managers take. As you have seen over the last 1 year, the sectoral...
right. Yeah, exactly. I was just coming to that because now I really want to know your sectoral allocations. Yeah.
Yeah. But the good thing is that in NPS on a monthly basis, all the portfolios are publicly disclosed on our websites. So the subscribers are free to actually go through the portfolios and take a call as to where each fund manager is currently
Siva, for
exposed
our
in terms
viewers,
of the
Siva, can you
NPS.
tell us the top 3 allocation in sectors?
From an ICC pension fund point of view, it will be BFSI, that's banking and financial services, which includes the NBFCs and the banks. Then we have exposure to IT and then auto.
IT and auto, your top 3 sectors where you have parked in money. All right, with that, thank you so much, Siva, for being on the show and helping our viewers with understanding investing in NPS during this volatile times. Thank you so much. All right, we'll take a quick break, and post that I'll be joined by Shweta, who will be answering your Shweta Jain, who will be answering your financial portfolio queries, and we will also connect with Nilesh Shah, who will help us understand the concept of 250 rupees SIP.